Hey everyone, and welcome to our deep dive this time around. We are taking a look at 100 years, a whole century of investments, trying to figure out what's worked best.
Yeah, this is going to be interesting. We've got a list of the top 20 performing assets, and let me tell you, it's not just your usual stocks and bonds. There are some real surprises in there that I think tell us a lot about long-term economic trends,
Yeah,
what makes for good investment, all that.
definitely. So, looking at the top of the list, we do see some familiar names, the usual suspects, you might say. US stocks, obviously, the S&P 500 always seems to be a strong contender.
Right.
And then, of course, you got Berkshire Hathaway and, come on, the tech giants. Everybody knows these guys. Microsoft, Apple, Amazon, Google. They're always in the news. Always seems like their stock is going up. What makes these particular companies and investments such consistent, like, outperformers over the long term?
Well, the old saying, past performance doesn't guarantee future returns, but you look at all these companies, and they all share some important traits. And one of the biggest ones is, well, innovation, right?
Right.
I mean, look at Apple. Think about it. They completely changed, like revolutionized how we use technology, personal technology. And it wasn't just a one-time thing. They've done it over and over and over again for decades. That's huge.
Yeah, and they keep doing it. New phone every year, always something new.
Exactly. It's that drive to create and dominate new markets that translates to growth. And growth attracts investors, plain and simple. Then you got Berkshire Hathaway, which is a perfect example, really, of how powerful smart stock picking can be. They call it value investing, right? It's all about finding those diamonds in the rough, those undervalued companies
Yeah.
that have, that long-term potential.
Okay, so this is where it gets really interesting to me because a little further down the list, along with all those big names, we start to see some things that, well, you don't always think of as typical investments. We're talking residential real estate, gold, even fine art.
Yeah, yeah.
Oil and energy, of course, that's a big one, but it's not what you picture when you think of your average investment portfolio.
That is interesting.
So, what do you think? What do these assets tell us about the bigger picture, the forces that shape the markets?
I think it really highlights how attractive, how appealing those tangible assets are, the things you can actually touch that you own.
Yeah,
Especially when things feel uncertain in the economy, people want something real.
makes sense.
Like real estate, it tends to hold its value pretty well,
Hmm.
even when inflation is high. And that's interesting because traditionally gold has been seen as the ultimate safe haven, the thing you run to when everything else is going haywire.
Right, gold is always safe. That's what you always hear.
That's the thinking. But real estate, it's interesting how well it holds up.
Huh. I always thought of gold as the go-to for safety during those times of, you know, economic turmoil. It's really fascinating to see how real estate stacks up against it.
It is. It is. And then you've got oil and energy, those commodities, absolutely vital to how the global economy runs and their prices. Well, they're often all over the place because they're influenced by geopolitics, what's happening in the world.
Right, wars, treaties, elections, all of that.
Exactly. So you see those big boom and bust cycles, reflecting all those global shifts in supply and demand.
Makes sense. So what about fine art? That just feels like a totally different world, compared to something like oil or stocks.
It's definitely a unique asset class because you're not just investing in a company or a commodity, are you? You're investing in something historic, a piece of culture, a moment in time.
Yeah, like a piece of history you can own.
Exactly. And while it can definitely appreciate a lot in value, it's not as liquid as, say, stocks, meaning it's a lot tougher to quickly turn it back into cash.
Right, right. You might be sitting on a gold mine, so to speak, but if you need the cash right now, good luck selling that Picasso.
Exactly. It's a good problem to have, but yeah. Makes you think about what drives value in the first place. Is it scarcity? Is
Yeah,
it cultural significance? Is it just good old supply and demand? What's the answer?
probably all of the above, right?
Most likely.
Yeah.
Now, continuing down this list, we've got index funds like the Vanguard Total Stock Market Index, a classic example of how powerful it is to have broad market exposure. Then there's emerging markets, tons of potential there, but also a lot more volatility.
Right.
Can't forget about dividend growth stocks either. Those are especially attractive when interest rates are low because those steady dividends can really provide a nice stream of income.
Yeah, makes a lot of sense. Okay, so now we're getting into the really, I don't know, advanced stuff maybe. We're talking private equity, Bitcoin, REITs, those real estate investment trusts, which are kind of like mutual funds, but for owning property, and then, of course, hedge funds.
Definitely a bit more, shall we say, complex,
Definitely more for the experts.
for sure. But, I think that brings us to a very, very key take.